Buying a first home isn't what it used to be. Housing prices, inflation, and rising interest rates have created a challenge for many Canadians trying to break into this real estate market. To help potential first time homebuyers, the federal government has recently introduced the First Home Savings Account, a new tax free registered plan where you can contribute up to $40,000 lifetime limit towards the purchase of a qualifying first home. Let's understand this in more detail. The First Home Savings Account is a new registered plan designed to help Canadians break into this housing market by providing for an account to help save for a qualifying first home. A qualifying home is a housing unit located in Canada. This includes existing homes and those being constructed. To qualify for the First Home Savings Account, you must be a Canadian resident with at least 18 years of age and you have to be a first time home buyer. Now, the question is, who is considered a first time home buyer when an FHSA is opened? You will be considered a first time home buyer when you open an FHSA if at any time in the calendar year before the account is opened or at any time in the preceding 4 calendar years you did not live in a qualifying home. Eligible Canadians can contribute or transfer from their registered retirement savings plan, also known as RRSP, up to $8,000 per year into their FHSA, up to a lifetime maximum of $40,000. If you contribute less than the $8,000 annual contribution limit, the unused contribution room would be added onto your annual limit for the following year up to a maximum of $8,000. For example, if you contributed $4,000 to your FHSA in 2023, you would be able to contribute $12,000 in 2024. Now, let's talk about the advantages of FHSA account. The first benefit is get a tax deduction. When you contribute, you can claim a tax deduction on your tax return. For example, let's say you contribute the full $8,000 in the first year and your tax rate is 25%. This would give you a potential tax savings of $2,000. Do this for 5 years and you have got a total potential savings of $10,000. You can claim the tax deduction in the year of contribution or in any future year. The second major advantage is grow your investments tax-free. Like all registered plans, you can keep the money you contribute to your FHSA in cash or use it to invest in bonds, stocks, mutual funds, and ETFs. All the returns you get from these investments would be tax-free. The next biggest advantage is withdraw your money tax-free. Let's fast forward to when you are ready to buy a qualifying first home. You can take the money out of your FHSA, including your original contributions and any investment earnings, without paying any tax on it to purchase that qualifying first home. Now, most of the people ask me this question: can I use both the FHSA and the RRSP home buyers plan? Well, the answer is yes. When you are ready to buy a qualifying first home, you can use money withdrawn from your RRSP under the home buyers plan and from your FHSA. As I mentioned earlier, with the FHSA, your contributions are tax deductible and withdrawals are tax free if used to purchase a qualifying first home. The RSP homebuyer plan allows you to withdraw up to $35,000 tax-free from your RSP to help buy your first home. However, the amount you withdraw must be repaid to your RSP within 15 years. Any withdrawals from your RSP that are used to purchase a home that are not part of a home buyer's plan withdrawal will be considered taxable income. Now, the biggest question most of the people have in their mind is, what if I change my mind and decide not to buy a home? You can keep your FHSA open for up to 15 years or until the end of the year when you turn 71. If you do not use your FHSA to buy a qualifying first home, you have a couple of options. You can either transfer the balance of the account on a tax deferred basis to your RSP, or you can withdraw the funds and pay the required taxes. The First Home Savings Account helps Canadians bring their home ownership dreams to their life. With the home buyer's plan and potential tax benefits, this account can be a powerful tool on your journey. If you have any doubts or any queries about FHSA, don't forget to reach out to me. I will share my contact details in the description box. If you found this information valuable, please consider giving this video a thumbs up and subscribing for more insightful content. Thank you and have a very nice day.